All right, so HIMS got absolutely destroyed today, and I believe I found the reason why. But as you can see, the stock completely obliterated two key support levels and finished the day down minus 10.28%, which is absolutely insane. Now, to be fair, as a result of DWAC, which is the Trump SPAC, we have seen a number of stocks that are SPACs or that were once SPACs take a hit as a result. And again, that could just be down to algorithms and etc. But the bottom line is a lot of SPACs got hit as a result, but HIMS got hit especially hard. I mean, 10.28% in one single day of trading is a lot. Now, let me explain to you why I believe this to be the case. Now, when I first initially started my research with HIMS, I shared it with my Discord. I highlighted who I felt was their main competitor. Now, I've seen a lot of people say Teledocs is our competitor or Doximity is our competitor, but I think Teledocs and Doximity, they're completely separate entities. Yes, they're in the same telehealth industry, but if you look at their target market, if you look at the services that they provide and they offer their customers, it's completely separate or completely different to what HIMS offers. All right, Teledoc and also Doximity, they deal primarily with hospitals, clinics, etc. That's where they offer their services to. Whereas HIMS is more geared towards the millennial markets, struggling with conditions that not necessarily are, acute. There might be conditions like hair loss or even more recently diabetes and behavioral health. These are some of the generic conditions that HIMS deals with, whereas Teledocs and Doximity are more acute or more serious types of illnesses. Not to say diabetes is not a serious illness, but you kind of get the picture, right? So HIMS is more geared towards the millennial market as well, especially with their marketing, their branding. So I felt the main competitor that I found was a private company called Lemonade. Okay, so they're called Lemonade Health, and they offer similar services with more healthcare solutions. Okay, however, their platform requires users to fill in an online questionnaire. The medical team reviews the questionnaire and requests for more information if required, and then sends out the medication. So Lemonade's branding is weak, in my opinion, and their user experience seems a lot more rigid. And I linked the website, so that's what I informed my Discord when I was doing my research into this company, and I felt like they were the direct competitor. Like, even with their branding, even though it's weak, you can see that it's still geared towards the millennial market. So this was the news that came out recently. Okay, so this came out today, actually, not recently, came out today. 23andMe, which is a publicly listed company, ticker symbol I believe is ME. Okay, so they have agreed to actually acquire Lemonade Health. All right, 23andMe Holdings, Nasdaq. Yeah, so Nasdaq ticker symbol is M&E. A leading consumer genetics and research company today announced the signing of a definitive merger agreement with Lemonade Health Inc., an on-demand platform for assessing medical care and pharmacy services online. Under the merger agreement, the purchase price is $400 million, subject to certain customary downward adjustments, of which 25% will be paid in cash and 75% in shares of 23andMe Class A common stock. So the acquisition is expected to close by the end of 2021. So I believe this news is fundamentally the main reason why we saw more of a significant sell-off in HIMS today. That is our direct competitor, who was once private, is now coming public, and of course that caused the sell-off, in my opinion. Now taking a closer look at Lemonade itself, you can see, like I said, they are very much geared towards millennials as well with their branding. It's quite bright, but look at the solutions that they offer. I mean, they offer a ton more solutions, from anxiety, depression, acne, hair loss, birth control, UTIs, so that's urinary tract infection, cold sores, primary care visits, high blood pressure. I mean, they do offer a lot more solutions than HIMS currently, but as we already know, especially from the recent Q2 earnings calls, part of our expansion plan, and also where the majority of R&D will be going into, is to expand our product line as well and our product offerings, and that's of course going to significantly boost our top and our bottom line. But that process itself will of course impact our margins. But as you can see, this is Lemonade Health. All right, so again, they have a section for men's health, women's health, skin, general health, and they also have a telehealth platform. And Lemonade Health themselves has been around for a while. You can see on Crunchbase, you can track some of their raises where they've had to raise finances, and you can see here from 2015 they've pretty much been raising money. They've been launching new services, birth control, So 2015, 2016, they've been active, 2017. And 2017, that's essentially when Andrew Dudum started HIMS. But despite Lemonade having a head start, as you will, I would say HIMS has a much larger and impressive following from our target market, which are millennials. And you can see that from our Instagram page. So Lemonade themselves, they have 10.8 thousand followers on Instagram. Whereas if you look at HIMS, we have over 114,000 on the HIMS. And if you look at the herd section of our Instagram, we have 131,000 followers. Okay. And again, a lot of that recent growth that we've seen was boosted with our partnership with the likes of Miley Cyrus, bringing a whole new wave of young female clients to our brand. And I honestly wholeheartedly believe we have a much stronger brand, much stronger online presence than Lemonade does. But Lemonade Health, I will give it this, they are no slouches, okay? Because recently, as of August the 3rd, they secured an important partnership with one of the leading drugstore chains in the UK. So Lemonade Health, of course, they're based in the US, but they are also expanding into the UK market. And they've landed, I mean, the creme de la creme, Boots. Okay, Boots are the big dogs, okay? There's no doubt about it. In the UK, if you are looking for health related products, Boots is 9 times out of 10 where you would go to. Okay, so this partnership here is very, very impressive. But again, HIMS also has partnerships in the UK. We've got Urban Outfitters. We've launched our own UK online e-commerce stores. And again, I was able to order the products. I think I've still got the products. Yeah, I've still got the products here. Let me get it for you. Yeah, still have the products here. So yes, Lemonade, we have to give them some props. You know, they are a key player, but is that a reason to sell? In my opinion, absolutely not. No, I still think even though they had first mover advantage by starting in 2015, I think HIMS is not only caught up, but we've overtaken Lemonade. And I think Lemonade themselves have realized that and scrambling, and probably the merger with 23andMe, I think is good for the CEO and the board of Lemonade, because they will probably cash out. Again, this is speculation. I don't really know this. But I think Lemonade right now are losing this battle. I think this merger was a great thing. And also it might do a great deal of good for 23andMe. Because if you take a quick look at 23andMe themselves, I mean, their revenue, their top line has just been going in one direction, and that is downwards. And also their bottom line, of course, isn't impressive as well. So I think this deal might help out 23andMe because it is a great sector and it's also a growing sector. So I think this will be okay, but will it affect HIMS? I don't think it will affect our growth and our dominance right now. I don't really think so. I think for the stock, it could. Of course, it already has. I mean, we did break through multiple support levels, but hey, I took the advantage and I loaded up even more. So I'm now close to 4,000 shares of HIMS, and I'm just taking full advantage of this volatility. I mean, this stock right now kind of reminds me of the volatility that we're seeing in Task with Chef, just up, down, up, down, up, down. And, you know, I'll just continue buying the dips until eventually Wall Street begins to take HIMS seriously, because right now they're just not, you know, they're just pretty much trading this stock, trading the hell out of the stock. For me, I've been happy to bring my average down. I think my average used to be about 12. Now my average is just below this resistance line here at $8.80. So I'm very happy with my average. I'll continue to average down because this is a brilliant company. And this recent news with 23andMe merging with Lemonade Health, it's not gonna impact us in the slightest, in my opinion. So that's the reason why HIMS took a massive hit today. Am I worried? Absolutely not. No, I'm absolutely not worried. But I figured I'll jump on, release this video, and share with you my thoughts. And if you are an investor in HIMS and you've done your homework, you've done your research, you've done your due diligence, I don't think you should be worried at all. So I hope you appreciate this video. I've been feeling really terrible this week. I've had the flu, so my nose has been blocked. I've had a sore throat, so I've not been able to really record anything. I've just been active in my Discord and chatting with all my Discord members. So if you do want to join my Discord group, the Patreon link is in the description below if you want to know what I'm doing in real time. But yeah, apart from that, thank you so much for watching, and I'll hopefully catch you in the next one very soon. Take care. Peace.